tuned into ET now, and this is Buy Now, Sell Now. I'm Karunya Rao with me. Will be joining in Aisha later in the show for a big interaction, for a very, very exciting one. But first, let me start off the show with the top headlines of this hour's. Markets, meanwhile, looking in fine fettle. You have the I.T and Pharma indices which are leading the market uptick. Nifty is heading towards that 12,000 mark, and that's why all eyes will be whether or not in today's session we can cross that iconic 12,000 mark. Top Nifty gainer L&T set to bag about 25,000 crore Mumbai-Ahmedabad bullet train project. It beat two other bids led by Tata Projects as well as Afcon's Infra. Next up, talking about another heavyweight, Britannia Q2. Margins definitely were better than expected. Revenue and profits were in line. Volume growth was at 10%. The stock, however, looking pretty weak in trade. And finally, on the earnings radar today is an HUL. Revenue may rise about 14%. We're expecting a profit growth of 15% YOY as well. And margins are also expected to see 20 basis points improvement, coming in at 25%. So these are the top headlines of this hour. Let me quickly tell you what's in store as far as the markets are concerned. What is the action that's taking place on these three? Sensex up 179 points as we speak. Nifty is up about 0.4%, trading above 11,900 and firmly so. Mid and small cap index are also trying to participate in the up move, but they're relatively looking tepid. Small cap and mid cap both up about 0.2% each in trade. Like I said at the start of the show, the day belongs to IT as well as pharma names which are contributing a fair bit to today's uptick. As far as sectoral indices are concerned, Nifty I.T is up 1.8%, Nifty Pharma is up almost 1%. Realty names and Nifty Auto also looking quite upbeat, but on the flip side you have a Nifty Bank which is trading completely flat. You also have PSU banking index which is under pressure. It's down by 1%, and some names from the metal and FMCG space also witnessing some selling pressure in the trade today. L&T has to be the top gainer. It's up 3.5%. You have an HCL Technologies jump quite sharply, up 4%. Bharti Airtel, another top gainer on the index today, up almost 3% as we speak. There's Tech Mahindra, Wipro, TCS, Infosys. Look at that. All the Nifty heavyweights together are gathering pace and powering the uptick on the benchmark index today. And Hdfc Bank continues its uptick for the second day. It's up 1.1%. Divi's Labs, Hero MotoCorp, both of them are also up more than 1%. But on the flip side, you have Britannia sulking in trade, down 5%. ONGC, IOC, GAIL, Hindalco. So these oil and gas stocks definitely putting, or rather capping, the upside on the market this morning. Let's move right on and bring on board our guests. Joining us on the show for technicals is Kunal Bothra, and fundamentals is Rajesh Agarwal. Let me go across to Kunal first. Kunal, what is your reading of the charts? How far away are we from conquering 12,000 on the Nifty again?
So, good morning, Karunya. I think it should be a matter of maybe a couple of trading sessions or maybe some good trading sessions for the global market. If this happens, say by today, tomorrow, then I believe conquering that 12,000 mark and crossing those levels could be pretty much strong. But devoid of that, because these 12,000 marks, these psychological marks are just benchmark and landmark. They don't tend to change the texture of the markets significantly. So yes, these are just important landmarks as such to achieve for the indices, and it feels good that the indices have crossed these kind of levels. But when you look at the market health, I think it's been a tremendous market currently in the last 3-4 weeks, right from the start of the October series. I think it's been a completely different market texture. You have so many new sectors which have emerged quite strongly, and you have the erstwhile sectors which have maintained their good strength. So the banking stocks have managed to make a comeback. The cement stocks post the results, as well as the price performance for many of these cement names are looking quite attractive. You have metal stocks which are buzzing quite well. I think gradually you're also seeing some pickup in the financial services name, and I believe that could be the next sector which I believe could see some strong traction on the upside. There is not significant selling into major names. If there is some kind of a selling, it generally gets bought into. You've talked of names like L&T and Airtel, Bharti Airtel. So these were a few of the stocks which are dragging lower, and you've seen sudden revival into these names. So this market is offering a completely different texture. You have new pillars which are emerging to support the market moves. at every rise, and I think that's the sign and a hallmark of a strong broad-based rally market. So 12,000 or not, but I don't believe it matters that much for a short to medium term trader. But I believe this market internals and the health of the market, which is extremely strong, is something which is very, very positive for a short term trader.
Okay, point taken then. Now, what about your high risk and low risk ideas for our viewers today?
So as I was indicating, Karnya, that I for one believe that there should be some fervor which should come back into the financial services space. So I picked up one stock from that category, and Piramal Enterprise is the stock which I would want to recommend. It's a very interesting chart because for the last 2 months approximately, the stock had been lying a bit low, no signs of a major trend pickup. It used to drag whenever there was a correction in the markets, and it didn't participate as much in the market rallies as well. So I believe that there's a change in the texture for Piramal Enterprises. It's completing a breakout of an inverse head and shoulder pattern. It's a very potent and a very strong formation which is happening for Piramal Enterprise. So I would suggest a buy in the anticipation that a strong breakout of this inverse head and shoulder pattern could happen over the next couple of days. Targets lined up would be approximately 1400 for Piramal Enterprises and stop loss to be kept at 1300 levels. The second is a buy on MGL. Again, interesting chart on the short-term time frame. Contrarian pick. It's broken some major support resistance levels on the indicators, and that generally is a precursor of a impending price move. So MGL is also a buy. Would suggest a target of almost 880 and stop loss to be kept at 818.
Thanks for that, Kunal. Rajesh is also with us. Morning, Rajesh. What are your fundamental picks for the long haul?
Morning, Karna. The fundamental pick for long haul would be one. I would talk about Lupin, which again, the numbers, the first quarter has been pretty good. They have divested the Japanese business. The focus is in generics. First quarter numbers were down by around 65%, but that was on expected lines, and we believe that going forward with the kind of friction pharma pack as a whole is witnessing, Lupin is going to be one of the major players, not only in domestic market, but also in overseas market. And they have a very healthy and pipeline, J&D pipeline, and the valuations are quite attractive even after this kind of run up. Hence, we recommend a buy on this stock with maybe a target of around 1200 odd rupees in the next 6 to 9 months. The other one would be Balkrishna Industries. That we are recommending with a target of 1600 odd rupees in the next 6 to 9 months. This is a focused player in an off-highway tire market, and with 85% of revenue from exports, I think this is one of the best plays in the tire industry, in the auto industry. Although this company supplies mainly to off-highway markets where earth mining and other things are related. The markets are going to start up after this COVID in the next 1 or 2 quarters. They have a very extensive product line. They have a very attractive cost advantage. And the best part is they have a good, strong brand and a good, healthy return ratios, I would say. And the valuations are also attractive. So I would recommend Balkrishna Industries too for a period of 6 to 9 months.
All right. Thanks then, Rajesh, for your picks as well. Let's move on to viewer queries. First up is from Aditya Prasad. He's based out of Mumbai. He wants to buy Kajaria Ceramics or Somani at the current market price. So which one is a better bet and is more advisable by our experts, he asks. Kunal, going by the pattern for both of these charts, what would be your advice and recommendation?
Both of them are very similar, Karnya. I think it's just a matter of maybe a few percentage points odd, which could vary. Some stocks, like for example, there could be phase where Kajaria Ceramics could lead up a rally. There could be some phases where, Somani Ceramics could lead up a rally. So it's not too much of a difference in terms of price performance. Now we look at the stock prices in on the base of the indicator patterns. Now both Kajaria Ceramics and Somani Ceramics had broken about their 200 moving averages in the mid of September. Post that, these stocks have given returns of anywhere closer to another 30 to 40% higher from those kind of levels. So I believe in that regards, the trends, the near-term trend and the medium-term trend is quite stable for both these stocks. Really difficult to choose or select just one of them. Probably, I think Kajaria Ceramics could probably get that added advantage. I believe because of the quality of the stock price, because of the liquidity, of volumes as well, and the consistency of price trend. So again, difficult to choose, but then if I just have to give some added advantage, I would probably favor it towards Kajaria Ceramics.
Okay. What about you, Rajesh? Which one of the two will you pick? Kajaria or Somani?
See, basically both of them are so similar that it's a very difficult call to take which one to go for, because if ceramic industry as a whole performs, then both of them are going to perform. But still I would go with Kajaria Ceramics, because one, we should not forget that these are challenging times for the entire industry as such. For ceramic industry, I would say, with the kind of COVID-19 situation, volumes have gone down pretty heavily. But going forward from third quarter onwards, we believe that volumes will pick up, and with a strong balance sheet, strong return ratio, and a good war chest of cash position with this company to go for any inorganic growth, I think this company is going to do well. And we should not forget the kind of drastic fall gas prices have seen, which again would benefit ceramic industry as a whole. I would go with Kajaria Ceramics for a medium to long term holding.
Okay, well, there you have it, the verdict for from both of our experts. Moving on to query number 2, which is also an email. Anand Maheshwari from Mumbai writes to us. He's bought 2,700 shares in Ashok Leyland at a market price of 86 rupees a piece. He wants to know whether there is potential for Ashok Leyland's share price to go higher, or should he exit at the current levels. What is your view on this, Kunal?
On to your investments on Ashok Leyland, the stock is going through I would say, a very strong revival. So even though it's been a late mover, from the rest of the auto pack, but I still believe that nevertheless the stock has started to show some aggressive signs of pickup. So it's look at it in this manner, that in the last 1.5 or 2 months, the stock has not gone through any significant correction, and the late rally which started for Ashok Leyland, the levels of 70 plus, those levels are being still being held on. So I think on price fronts, on the recent pickup of prices, the way the stock price patterns have shaped up, the indicators on the longer term time frame, the durability of the pattern, the historical comparison on so many fronts, I believe that it's a good prospect to hold on. And since your buy price is approximately at 84, 85 kind of levels, then I believe at 70, 72, if there is any kind of an opportunity over here, then I believe you should look to average further, try and bring your cost prices lower, because I believe it's just a matter of time that many of these auto stocks are looking for the second leg of price uptrend. So I think it's just a matter of maybe a couple of months where these stocks would come back into the thick of positive price action. So I would be of a strong belief that you should be holding Ashok Leyland, and if there is any opportunity of a dip, then look to average further.
Okay, all right. Kunal, thanks for helping out with those queries and sharing with our viewers your views on various stocks as well. Rajesh, thanks to you also for joining in. Moving on, let's pull up the BNSN stock cloud to give you a sense of what are the stocks you need to keep on your watch list today. Starting off with an ACC which came out with its numbers last evening. Good gains coming in for that one, up about almost 1% in trade. In fact, volumes were also up 1% YOY. They came in at 6.5 million tons. Revenue was flat. Profits were up 21%, and margins saw a very healthy expansion from 15.7% to 19.4%. And analysts also said that the worst is behind, and going forward in the second half of the year, cement sectors are likely to benefit even further. Meanwhile, pull up a Britannia as well. The numbers were actually not bad. Margins were above, PAT and revenue were in line, but the stock is sulking, and how? It's the top loser on the Nifty index. EBITDA came in at 675 crores. Margins expanded from 16.1% to 19.8%. Perhaps there's something that we need to understand what is it that the market is not liking. L&T, top gainer on the Nifty on back of that 25k crore win. HUL in the focus as well for results today. Rallis, HDFC Life, Hind Copper, some more candidates to watch out for in trade, followed by a Wipro and a KIOCL. KIOCL announced their buyback, and that's why the stock is in focus. Slipping into a break here, an exciting conversation coming up on the other side. Stay tuned.
Well, the one company in focus after its earnings is Britannia Industries. The stock on last count is down about 5.25% on Britannia Future. So let's try and understand what really went by in the quarter and what is the outlook going forward. Joining me right now, Varun Berry, the MD at Britannia Industries. Varun, hi, good morning. Good to have you on the show. What's disappointed the street, Varun? I guess, in the first quarter, you stuck your neck out and you said that you'll manage to maintain the sales momentum. You posted a good, solid 26% growth, which didn't quite match up in the quarter. To me, that seems to be the one key reason.
Well, you understand the situation that we are going through. Nobody can forecast what's going to happen tomorrow. But I think we had a great quarter. I personally think, 11% growth in the face of such a situation was fantastic. And similarly, even from a bottom line perspective, we had a really good quarter. See, what happens is that in a situation like this, what we've seen is, if you were to look at the trade structure, it's the big towns versus the rural, and it's the modern trade versus the traditional trade. So if you were to look at it, our traditional trade growths have been solid double digits, right? It's the modern trade, which, August is the month. August and January are the 2 months when you have the big days in modern trade. And this year, the big days have been very, very tepid. Modern trade growths have been very low. The shutdowns, etc., were all in large towns and cities, and hence modern trade suffered. So I think what we look at is how a bulk of our business is doing, and I think the traditional trade has been very solid. Our rural growths have been very solid, which is what really matters in the long run. There have been, obviously modern trade will come back. It's not that modern trade is going to remain tepid as we go forward as well. It will certainly come back, and I think that with the large towns opening up, things should normalize much faster. But yes, you are right. Maybe, a 27% growth in the first quarter and an 11% growth in the second quarter would have, people would have thought, what is this? But I think, in these current circumstances, it's a fantastic number.
Yeah, sure. I was scratching my head when the earnings came out. I was like, what went wrong from the lockdown to now when things are beginning to open up? Are people not stocking up on cookies, not eating cheese? What are the patterns that you're witnessing?
Well, the consumer patterns change every day. I do think that people have started to eat out, snacking outside home, ordering, cooked food, or ordering snacks, hot snacks at home. All that has started off. People have got very bored to sitting at home and just doing nothing. So I think people have started to venture out as well. So things are moving to, I would say, at about 60% or 65% normalcy. I think it'll take a little more time. Obviously, COVID's not going away in a hurry, so it'll take more time. But yes, we will walk towards a normal way of life in the next, 6 to 8 months.
Sure. Varun, I completely understand that the picture is so hazy and things are so fast changing and dynamic. But could you give me a broader parameter of your segmental revenue? And where is it that you see the biscuit sales, the non-biscuit sales, dairy, what have you actually headed in, say, the next 6 months?
We don't give a forecast of sorts, and frankly, even if we would, we wouldn't have been able to. Nobody knows where it's going. But I would say that, pre-COVID conditions realizations we could come to in the next 3 to 6 months. In that, I think, during these 3 to 6 months, we could, obviously biscuits and other home consumption products like cheese, rusk, etc., would be at an elevated level of growth, while the others would be at a slightly low, level of growth. So that's all we can say at this point in time. But I'm still very positive, despite the fact that the economic parameters are not looking extremely positive. But I do think that food, etc., will be reasonably good and robust as far as growths are concerned.
Sure. Varun, what can you tell me about the competitive landscape and where you see your market share headed?
We haven't had a market share report for some time now because Nielsen was not able to do their fieldwork during this period. But my guess is that we are definitely, at the upper end of the quadrant in terms of growths. Certainly would be, equal to or higher than category growths. Because we've been executing reasonably well. Our execution on the ground has been really good. All of the key performance indicators are looking solid. So our Hindi belt, growths are very solid. Our traditional trade growths are very solid. And some of the focused areas that we've taken for ourselves are, even our adjacency growths have been very solid. Barring cake, which is dependent a lot on schools and on railways, etc. We've had very solid growths even in the adjacency areas. We've had a very good growth even in our international business. So overall, I think it's been a pretty good quarter for us.
Sure. You mentioned that you're witnessing down trading of products as well. Now, given that you followed a strategy of introducing premium products and then also launching, small affordable packs as well, what's been your feeler from the ground as to which way the consumer is actually tilting?
So, when I look at down trading, I'm not looking at down trading within the category. I'm looking at down trading in the consumers' set of foods that they eat, right? So I think we are the cheapest snack available in the market, and hence the down trading is leading the consumer towards our product. Within biscuits, yes, there are some areas where there's down trading happening. We don't have a big play in the value segment, but we've been seeing a very good movement towards our Britannia Marigold, our Milk Bikis. All of those products are doing extremely well, which are not just good, well priced from a consumer standpoint, but also extremely profitable. So it's the perfect sweet spot as far as we are concerned, and we are seeing good momentum there.
Sure. Varun, what is it that you can tell me about the input cost environment? Because Q2 saw some moderate raw material inflation. What is the outlook for your key raw materials going ahead?
So what we've seen in the second quarter was maybe a 2 to 3% kind of input cost increase on the commodities that we buy. And within that, we saw deflation on flour, which was almost at about a 4% deflation. And obviously a deflation on the milk products that we consume because milk prices have been fairly low. And that deflation was in the around 20% odd. While there was inflation on palm oil, there was a 25% inflation on palm oil and a very moderate 4% inflation on sugar. As we go forward, I think the flour prices will normalize and the deflationary environment on flour will go away. Starting December, once the free wheat, etc., from the PDS system stops, I think there will be a slight inflation there. I'm hoping that the inflationary pressures on palm oil will come down to an extent. So I would see a reasonable range-bound inflation even in the next 6 months or so.
Sure. Varun, as I'm looking at your numbers, your debt levels have risen in this second quarter. There was a rise in your short-term borrowings to fund the raw material covers. It seems to be the case. There was further high dividend payout as well and redemption of some of your ICDs, which led to lower end cash levels. What is it that you can tell me about cost-saving efforts going forward and sustainable efficiency gains?
So the debt was to fund some of our raw material purchases. So we do go long when we think that the prices are right from a raw material standpoint. And debt today is again, fairly cheap. So we were borrowing money between 3.5 to 4%, which is a very attractive price to borrow. And that's what we did. And as we move forward, this is the time to wind down because now we'll be using some of the commodities that we bought. So that's where the debt came in. And I think it's not a long-term thing. It's, the dividends, yes, we paid very good dividends. Despite that, we have a fairly good cash position as we stand. And we are generating, almost 150 crores of cash every month. So we are in a good place as far as that is concerned. So that should be making our investors fairly happy.
I'm sure they're all listening to you. What can you tell me about the capacity expansion plans, Varun? Because, the feeling that I get is that things are just so hazy, not just with what the consumer patterns are going to be, but just how life is going to be in this post-COVID times. Given that your capex in the first half FY21 was a little modest at about 1 billion rupees.
Yes. Yeah, so, you've got to remember that we sell almost 1.3 million tons of product every year. So even if our volume growths are, let's say, 7-8%, that's a big tonnage. And that requires us to invest in capex to get those capacities going. So what we've done as of now is finalized 3 new facilities that we'll be putting up. One is in Tamil Nadu, in Tirunelveli, and this is the first time we are getting an incentive from the Tamil Nadu government. And it's, as you know, it's our biggest state. So we are very excited about that investment. The second is in UP, which is turning out to be a very large state for us as well. Despite the fact that we have still have a low share there, it's turning out to be our third largest state today. And we've got no, capacity of our own there. So we are putting up a facility there, and we've got, the government giving us incentives there as well. And these are very attractive incentives, which are going to last us for another 10 years or so. So that's the second facility. And the third one is going to be in Bihar, which is a very strong state and a large state for us. So that's in order of priority. And in the next 2 years, we'll be putting up all of these 3 facilities.
Sure. Within your product mix, Varun, where do you see visibility of a higher trend? And given the geographical trends, would you say that rural will continue to dominate the urban trend right now?
I would think so. I think, there are 2 factors to this. One is obviously the rural economy seems to be buoyant. We've had 2 good years of monsoon and, the Manrega, etc. All that seems to be working. And there was some reverse migration from large cities to rural areas. So that's one factor which is leading to some kind of buoyancy as far as rural is concerned. But more than that, you've got to, as a company, till about 7-8 years ago, were a fairly urban-centric company. And our shares, even today, in rural areas are lower than what they are in urban. So we have an opportunity of gaining share in rural areas. So putting those two together, I think for us, rural is going to be a very, very important play.
Varun, it's a lot leaner and fitter you since we last saw you on TV. Are you off cookies, off dairy?
Well, I've been exercising very regularly. And yes, I'm not off cookies, I'm not off dairy, but I've been exercising very regularly.
Okay, burning all the carbs down. That's the way to go. Great speaking with you, Varun, and good luck for the future quarters ahead.
Thank you very much.
Thanks. Okay, that's Britannia for you with news that you haven't seen much of an improvement in the stock price. 5.5% lower for Britannia futures still as we speak. The markets, we're lingering around that 11,900 mark for the futures. We'll take a very short break. On that note, come right back for more on markets.
Welcome back. You're still watching Buy Now, Sell Now on ET Now. Time to get you the answer for today's quiz. Firstly, let me just quickly repeat the question that we asked you this morning. Which of these stocks commands the highest EV to EBITDA for FY22 forward-looking ratio? Sagar Cement, Heidelberg Cement, Birla Corp and Ramco Cements. And the correct answer to that question is Ramco Cements. Let me quickly tell you who the winner is, who the quiz champion is for today. And it's Nitai Das, who wrote to us quite quickly and very correctly. Thank you so much for participating. For the rest of our viewers as well, stay tuned. Tomorrow morning, once again on the ET Now handle, we will post a fresh question for Buy Now, Sell Now. Moving on then, Times Network Special Investor Education Series, Nivesh Ki Fande will seek to guide investors on better managing their financial portfolio and also provide them with simple explanations on how some financial products work. And on this edition, we're talking about exchange traded funds or ETFs. Take a look.
One investment avenue which has been gaining popularity over the last couple of years has been exchange traded fund or ETF.
That's true. Now ETFs are funds that invest in a debt or equity index or commodities like gold.
Yeah, you know, their expense ratio is low since they are passive investments, so they're available at a low cost to investors.
For example, an ETF that's based on a market index will invest in stocks of the companies in the same ratio as they're represented in the index.
So the performance of that ETF will rise and fall almost identically to the performance of that index.
To invest in ETFs, an investor will have to have a demat account as they are bought and sold through the exchanges.
And this very aspect makes ETFs highly liquid since they can be bought and sold like regular stocks at any given point of the day.
So do consider adding ETFs to your portfolio. That's all from us on this edition of Nivesh Ki Fande.
Okay, moving on, let's talk to you about some more buzzing stocks and the one which have garnered a lot of interest from the market standpoint as well. Demand revival in the MDF segment has been shot in the arm for Green Panel Industries. Stable pricing, cost rationalization and efficiency enhancements have also aided the company. Varun is here to tell us what's brewing. Okay. All right. Moving on. Chairman and Managing Director of Reliance Mukesh Ambani lays down his vision for transforming India to realize its true potential. Talks about three things he will focus on next: education, clean energy and reinventing manufacturing. Also hails the FM's reforms during the COVID crisis. Listen in.
I think that what I'm working towards is really three things, as we said. Like the first is really transformation of India into a digital society. And that digital society incorporates all the future industries so that the next 30 years of India is 100 times like what we had never imagined is what we can achieve, right? So that's the first piece that, at least in my humble way, we are working to. The second, coincidentally, combines with the magic that our respected finance minister talked about. And I think that linkages in education, and it's time to transform our education sector at any point in time. We have 200 million children in India in the education system, and it will take us 8 to 10 years to completely transform the skill base of India. And I think that what as Finance Minister very aptly described, what is magic, I think that we have the formula to convert that magic into reality and establish linkages between academic institutions, real world, skill training, and employment in a way that actually sustains India for much higher quality and better jobs. And the third thing that we're working towards is really transformation of energy. And we think, again, that the world is right and India is in the right mindset to completely, in the next few decades, move away from fossil fuels to completely renewable energy, be Atmanirbhar, and really try and see if we can make our modest contribution in terms of development of India. And in energy, it's also the development of the world in terms of this transition. The way I think about it is that what really controls life is we are already in information, right? Both with what our IT industry has done and with what we have done in communications, we are leaders in the world in information. We have to now convert that to intelligence, right? We have to have the best human resources, and we have to have our own energy and be Atmanirbhar. If I can play my small part in actually achieving this and create institutions that will perpetuate and sustain that, then I would have done my job. I don't know whether I'll succeed or not, Omkar.
Moving on then, PM Modi hails a people-powered and driven approach of lockdown to keep India's death rate because of COVID very low. He adds that India was the first country to adopt a flexible lockdown. Meanwhile, Bill Gates says India's research and manufacturing capacity will be critical for fighting COVID-19 and that the vaccine will be available only by next year. Listening.
Thanks to a people-powered and people-driven approach, India kept its COVID-19 death rate very low. Today, we are seeing a decline in the number of cases per day and in the growth rate of cases. India has one of the highest recovery rate of 88%. This happened because India was the first countries to adopt a flexible lockdown when the total cases were just a few hundred. India was one of the first to encourage the usage of masks. India actively began to work on effective contact tracing. India was one of the earliest to deploy the rapid antigen tests. Friends, India is now at the forefront of vaccine development for COVID. Some of them are in advanced stages. We are not stopping here. India is already working on putting a well-established vaccine delivery system in place. This digitized network, along with digital health ID, will be used to ensure immunization of our citizens.
And international teams of scientists are collaborating at full speed on the vaccine clinical trials. Likely, one or more of these vaccines will be available by early next year. In fact, as we have multiple vaccines, we'll have to make sure we understand exactly where to use each of them in the time when those volumes will be constrained. So the pace of the science has been remarkable. And my bet is that when we look back on the history of COVID-19, one of the bright things will be that the scientific community worked together to come out with the tools to bring this to an end. But despite all this good work, right now, as fast as the science has moved,
and before we wrap up, here's a quick update on the top news makers from the world of startups. Take a look.
The era of dual listing is over. The Ministry of Corporate Affairs and the Department of Economic Affairs has decided to end the contentious clause of dual listing now, which had required a company to list in India as well as overseas. With this move, a company can directly list in one of the 7 designated markets. The decision could pave the way now for the global listing of Reliance Jio and LIC and so many startups. The government has tightened the screws of FDI from China. FDI proposals with even minuscule Chinese holdings will need government approval going ahead. This move amidst border tensions with China is going to have some huge ramifications for startups like Paytm and Zomato and Big Basket, all of whom have significant Chinese investments in the companies. In 2017, Alibaba's interest began on Sanat, and by 2020, Alibaba is going to own a controlling stake in Sanat, which is one of China's largest big box and supermarket chains. The move coming in as Alibaba looks at benefiting from the shift to online purchases of groceries in China, and this after the pandemic, the COVID disruption has taken place. Alibaba is going to spend $3.6 billion for a 72% stake in the company. Now, if you need an Uber ride, you may need to wear your mask and click your photo. This could be the new norm as Uber is introducing norms for riders in its new safety policy. Riders who've been tagged for not wearing masks in the past on a previous trip should actually click those selfies showing them wearing a mask if they want another ride in Uber. Two more probes against Facebook by European data regulator, and both of them concerning Instagram's handling of kids' data. The probe is coming after 1 year, and this after a US data scientist had reported concerns that Instagram was leaking data of minors. Facebook is saying that Instagram always made it clear that contact info is displayed if people switch to a business account. But is it right to reveal contact details of kids or put children at the risk of being influenced? That's what the probe is going to be all about.
Wrap on the show. Thank you so much for tuning in.